Hey, it's Lewis here and welcome back to the channel, and in today's video I'm going to be analysing Baidu stock. I'm going to be using fundamental analysis via TIKR terminal to get a feel for the numbers, and then I'll be putting them into my analysis checklist to ultimately determine the quality of the business. I'll be then putting the free cash flow into my DCF and we'll come to a fair value of their stock. Let's get straight into it. Baidu. So Baidu Inc. is a Chinese multinational technology company specialising in internet-related services and products, including artificial intelligence (AI), and it's headquartered in Beijing. So it's one of the largest AI and internet companies in the world, and yeah, so the company itself was founded back in 2000, but the search engine was made in 1996. Best way to look at Baidu is it is the Chinese version of Google. So that's how it's mostly well known as anyway. Yeah, the company itself is listed on the Nasdaq under ticker BIDU. It's also listed in, is it Hong Kong? Yeah, I think it's Hong Kong. But yeah, what makes Baidu interesting is it is the largest search engine in the world, and they hold a 76% market share in China. So yeah, they're a big deal in China, let's just say that. Now let's have a look at the sales for Baidu, and it's not very interesting, let's be honest. So because the company only operates in China, all of its revenue comes from China, but the sales per business itself, Baidu Core makes up 76%, then IQIYI makes up 26%. I'm guessing Baidu Core means the search engine business, but yeah, they're the only revenue streams. But yeah, not much else to say apart from that on the sales side. All the sales come from China, and it's a big search engine in China, and that's where they make most of the money. Now let's have a look at the Baidu financials via TIKR.com, and yeah, TIKR terminal. Yeah, income statement, we'll start there. So for the past 5 or 6 years, the revenue has gone up, but it's not been all plain sailing for Baidu. Up until 2018, it was increasing, and then it's been stagnant a little bit. So it's quite interesting that, because if you'd think it's the Chinese version of Google, you'd expect the revenue just to be slowly increasing, but it's had a few years where it's been stagnant pretty much. So that's something to bear in mind when it comes to your growth rates later on. And yeah, so the business itself has got high gross margins, which is pretty good. And then we'll have a look at the net income. So the business is very profitable. It's clear to see. Blip in 2019, but yeah, not bad in terms of profit margins. Then yeah, we'll have a look at the shares outstanding, and the company itself is slightly decreased shares, not by much though. So yeah, interesting really. I find it interesting how the growth has stagnated. Something to really look into if you're interested in this business. Yeah, cash on hand. So cash on short-term investments. This is interesting. They've doubled it in the past 5 years or so. Not bad. Not bad going really, is it? But yeah, long-term debt anyway. So long-term debt has gone up a bit over the past 5 or 6 years. Not too bad. If you take into account the cash balance, they basically have no debt. They have no net debt, which is fantastic. Cash flow statement now, and cash flow from operations minus capex is free cash flow. And yeah, you can see from here that the free cash flow has decreased over the past 5 years. Yeah, something to bear in mind when you value this business. You can't put high growth rates essentially, because the growth isn't there, unless we can show that we're going to grow even more. But I guess it's one of those things you've got to bear in mind when you're doing your analysis. Right, so onto the ratios now. And why do I like the ratio section? Well, because it tells me a story of the financials a bit better than just numbers on my screen do. Return on capital, an important figure when I look at a business. Unfortunately, it's not quite there for Baidu. So, not sure why, but the return on capital isn't quite up to scratch, and it's something you would want to improve on. Gross margins, we spoke about them. Net income margins, take out 2019, it's not looking too bad. But yeah, free cash flow is a little bit better. Current ratio, there's not much debt in this business, let's be honest. So the current ratio is looking solid, way above 1. Cash conversion cycle is solid as well. Debt to capital is quite low, let's be honest. 29% is not a big amount, more of a manageable So yeah, pretty solid. But yeah, interesting financials there from TIKR.com. Yeah, if you want to use TIKR, the link in the description down below. Use that link and sign up. Have good fun with TIKR because it's a fantastic platform. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. Now let's have a look at the genuine impact stats for Baidu, and we'll start with the quality metric first, and currently it's looking medium on the quality metric, so profitable, it's not too profitable according to GI, financial strength very strong, capital allocation very poor, so a bit of a mixed bag there. Value wise it's looking extremely cheap. Income statement medium, balance sheet cheap, cash flow statement very cheap. So yeah, it's looking fairly good from a value point of view. In terms of growth, it says growth being high, and well, let's just say it's low, which just from what we've seen from TIKR, that is the case. But yeah, a mixed bag there. You know, looking like decent value, but we'll just have to see. Yeah, interesting stats there from Genuine Impact. Analysis checklist for Baidu. And we'll start with my first pillar, so profitable, high returns on capital using low leverage. Returns on capital are quite there for Baidu, unfortunately. It is a big shame, I wish they were higher. But yeah, you want this to go up over the coming years, let's be honest, because 6% is not good enough. Yeah, simple as that. Gross margins and net margins are looking fairly decent, and you want them to be even higher. With them being the most dominant search player in China, you want their margins to be as high as possible. That's just my view. But yeah, as long as we can maintain decent margins, I'd be happy as an investor. Current ratio of 3, not to worry about there. Cash conversion cycle, very solid as well. Debt to capital, not too much debt, and we can pay the debt off pretty quickly with the cash, so it's pretty solid really. Proven ability to grow, mixed bag here. Revenue growth has been there, but net income's been down. Return earnings up, free cash flow down, so it's a bit of a mixed bag here, and you'd maybe have to dig into the financials a bit to see what's really going on. Long-term debt repayment, they've issued a bit of debt, but like I said, doesn't mean too much when they've got more cash on hand. Doesn't matter at all really. Increase the shares slightly, maybe a tad harsh here. Dividend growth, they don't pay a dividend, they reinvest into the business, and good acquisitions. They must have sold us some assets because we've got this in the green. Quality score 60%, so not great, but there's a few anomalies here I would say, so it's not all to worry about. This is just a quick screener in some ways to see what I think the quality of the business is quickly. But yeah, buy at a fair price. So interestingly, P ratio and the price to free cash flow ratio are way off. That's due to the free cash flow being a lot lower in 2021, and yeah, 26 for PE ratio is a little bit high for just what I'm looking for on here. But for DCF valuation for a 10% return, looking at a share price of £232, US dollars, and the current share price is $108, so from there it's an uplift of 115%, which is very interesting. Hence why I was very interested in this company, because when I saw these numbers I was like, this is interesting. So we'll go to the DCF valuation now, and the free cash flow numbers estimated into the future. Not big growth rates at all for a company like this. 10% return, 2.5% growth into the future, and adjusted for the net cash we've got, a share price of $232 converted from Chinese yuan. So yeah, the current share price is $108, and we've we've got a fair value for a 10% return of 232. That is an ample margin of safety for anyone looking to look at a Chinese company, for example. It doesn't come without risks though. The Chinese tech companies have been absolutely hammered, but you know, this is where the value is at the minute. And let me just change this number for a 15% return. $156. If you want a 20% return, $122. Right, okay, 25% return. We're near that ballpark. So yeah, it's Baidu is just looking cheap. Essentially, it's just looking very, very cheap. If you can improve their business metrics, fantastic. But yeah, I mean, it's looking very cheap and it's looking like a bit of a bargain, and hence why I'm quite interested in the company. But yeah, we'll just have to see. Nothing is guaranteed. So there we have it. That was my full stock analysis for Baidu. And if you enjoyed today's video, then please subscribe to my channel. Thank you very much for watching. I will see you next time. Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos